Banks have traditionally been perceived as the trusted custodians of our financial assets, with the enticing promise that our money steadily grows over time thanks to the allure of interest. However, this widely held belief oversimplifies the intricate economic dynamics at play. While it is true that banks offer a secure repository for our funds and provide the convenience of liquidity, the interest rates they typically offer are often meager. In today's low-interest rate environment, the nominal interest earned on our savings is frequently insufficient to even match, let alone outpace, the rate of inflation. Consequently, the actual purchasing power of our money gradually diminishes, even though our bank balances may numerically increase. In essence, while it might seem that our money is growing in the bank, it is not necessarily working effectively to preserve, let alone enhance, our true wealth. This issue becomes especially pronounced during periods of high inflation when prices for goods and services rise rapidly, accelerating the erosion of the real value of our savings. To address this limitation and secure our financial future, it is imperative to explore alternative investment avenues beyond traditional banking that have the potential to not only preserve but also enhance the real value of our wealth over time. The subsequent points in this discussion delve into some of these alternative assets and strategies that can better serve our long-term financial goals. 1. Precious metals, gold, silver, and platinum. One of the primary reasons money holds value is its function as a store of wealth for the future. However, in the contemporary world, governments frequently print more money to cover budget deficits. This can lead to a decrease in the value of currency. To counter this, financial experts often recommend investing in valuable and scarce assets. This is why many affluent individuals allocate a portion of their investments to precious metals like gold, silver, and platinum. These metals tend to appreciate in value, particularly during periods of high inflation. For instance, gold, which was once priced at $400 per ounce before the 1950s, has now surpassed $2,000 per ounce in 2023. According to Prime XBT's gold forecasts, it could reach $10,000 per ounce by 2032, potentially quintupling your investment in a decade. So, while cash loses value over time, precious metals tend to appreciate. If you're interested in gold but don't want to physically own it, you can consider investing in gold exchange-traded funds, ETFs, which offer a cost-effective way to gain exposure to gold price movements without the need for physical storage. 2. Industrial commodities, raw materials. Unlike precious metals, industrial commodities like silver, cobalt, nickel, and copper derive their value from their utility in various industries. Silver, for example, is integral to electronics, medical equipment, and nuclear reactors. These metals possess unique properties that can't be easily replaced by alternative materials, making them highly sought after. Take cobalt as an example. Its demand skyrocketed since 2020 due to its critical role in electric vehicle battery production. Consequently, cobalt prices surged from $20,000 per ton in 2012 to $40,000 in 2022, representing a 100% increase in a decade. For most people, directly investing in these raw materials isn't practical. However, you can achieve exposure through stocks of mining companies, mining-focused mutual funds, or derivative instruments like futures and options. 3. Safe haven currencies. In today's world of fiat currencies, where none are backed by gold, geopolitical stability plays a vital role in wealth preservation. The wealthy often entrust their funds to Swiss banks, because Switzerland boasts one of the world's most robust economies and offers a stable geopolitical environment. This makes the Swiss franc a reliable safe haven asset during times of global turmoil and instability. We've witnessed this during events like the Eurozone debt crisis in 2009 and the global financial crisis in 2008, where substantial funds flowed into Switzerland to shield wealth from currency depreciation. Additionally, the Swiss franc serves as a valuable alternative to the US dollar in international trade. For example, during the recent Russia-Ukraine crisis, Russia conducted transactions in Swiss francs to sidestep US sanctions. These occurrences led to a significant increase in the Swiss franc's value. In early 2023, 1 Swiss franc equaled 1.1074 US dollars, resulting in substantial gains for Swiss franc holders. However, opening Swiss bank accounts isn't feasible for everyone. Luckily, currency exchange-traded funds, ETFs, and forex brokers like forex.com enable smaller investors to gain exposure to currencies with minimal investments. 4. Sovereign guarantees. The inscription, "This note is legal tender for all debts, public and private," found on the US dollar reveals that it derives its value from being accepted as a means of payment. While fiat currencies like the dollar aren't backed by physical assets, they rely on the trust and creditworthiness of the government that issues them. This trust ensures their stability and acceptance. Consequently, investing in sovereign guarantees, which hinge on the financial strength and integrity of governments, is a prudent strategy. Governments are typically the last entities to default, as their insolvency would have catastrophic implications for the nation. To access this form of investment, individuals can consider government securities or G-SECs. However, it's essential to focus on G-SECs issued by stable governments with strong credit ratings. The 2009 sovereign debt crisis in Greece serves as a stark reminder of the importance of assessing a government's global standing when investing in G-SECs. In the United States, investors can explore treasury bills, notes, and bonds to gain exposure to sovereign guarantees. These instruments offer superior returns compared to traditional bank deposits and are backed by the U.S. government's economic strength. Small investors can purchase Treasury securities directly from the government via the Treasury Direct portal or on the secondary market. 5. Value-oriented stocks and mutual funds. While Treasury investments offer a safer alternative to cash, they may yield lower returns than stocks. Many investors seek higher returns, but they also desire low-risk investments. The stock market provides an opportunity to achieve this balance. Stocks are categorized into two primary types: growth stocks and value stocks. Growth stocks, often exemplified by technology companies, carry higher risks due to their innovation-centric nature. Conversely, value stocks, such as those involved in industrial sectors like Nucor, are generally considered less risky because they serve established and enduring market demands. Value stocks typically offer steady and stable price appreciation and often provide consistent dividend income. However, researching individual value stocks can be time-consuming and challenging for average investors. In such cases, dividend-focused mutual funds like the Vanguard High Dividend Yield Index Fund Admiral shares can be an attractive option. These funds have a history of stable dividend payouts and offer an accessible entry point for retail investors. 6. Real estate and land. Land, considered a non-depreciating asset, has maintained its value throughout history due to its scarcity and continued demand for housing, schools, factories, agriculture, and commercial spaces. Residential homes, office spaces, and commercial properties built on land also retain their value, making real estate a reliable hedge against inflation. Housing prices have seen substantial appreciation, even after accounting for the 2008 housing bubble. While many individuals delay real estate investments until later in life, owning a slice of the retail property market can be advantageous at any age. Accessing real estate investments is more accessible than many think. Real estate investment trusts, REITs, provide a way to invest in real estate without the burden of owning physical property. Additionally, online platforms like Whatnot offer opportunities to invest in collectibles like rare baseball cards, comic books, and action figures, even if you can't buy the entire item outright. If you are looking for ways to make more money, I recommend you watch this video next. Do not hesitate to share this video with friends, subscribe to the channel, and share your thoughts on today's video. Thanks for watching, and I'll see you in my next one.